Very good morning, everyone. You're watching the Market Cafe on ET Now with me, Kanishka Sarkar and Shreyansi Singh. Well, over the next 1 hour, we'll bring you top developments from India and around the world and also tell you about the stocks to keep on your radar today. Well, the US markets posted yet another day of decline yesterday, even as it may be headed for a second straight week of weekly gains. What are you picking up, Shreyansi?
Well, absolutely. That just about sums it up, right, Kanishka? That's the kind of move that we've seen coming in yet again when it comes to the US markets. A slight bit fall coming in as far as the Dow Jones is concerned in terms of the futures and S&P 500 futures as well. Of course, you did have the Dow falling about 155 points there, about a 0.4%. In terms of the regular day trading session as well, S&P 500 slid 0.3% as well. While you did also have the Nasdaq Composite, that's the one that dropped 0.5% as well. Now you do have President Donald Trump announcing those 25% tariff when it comes to all cars that are not made in the United States. So that is the development that was still sort of being digested when it comes to the market. Of course, on the economic front, you do have February's personal consumption expenditures price index. That is something that we're watching out for. And Wall Street, of course, like you mentioned, is headed for a second straight week of gains. Dow is on track for an 0.8% advance on a week-to-date basis. Other than that, you have S&P 500 0.5% uptick on a weekly basis coming in for that one as well at this point. And Nasdaq Composite, of course, on pace for a slight bit of a 0.1% gain there. So that's largely the kind of picture that we have emerging as far as US markets are concerned. So it's been a decent week, a resilient week rather, when you take a look at the last couple of days coming in for the Wall Street at this point, but largely that's the kind of handover that we have.
That is correct. It's now time for a quick crude check. Well, oil has approached its 1-month high as investors assess supply and trade war risks. Now, price edged higher yesterday as traders assessed a tightening of crude supplies along with new US tariffs and their expected effect on the world's economy. Now, Brent crude futures gained 0.3% to settle at $74 a barrel. And the US WTI crude futures rose to nearly $70 a barrel. Now, this was after oil prices rose about 1% to their highest since February yesterday. Now, remember, market participants are weighing escalating trade war risks as well as President Trump has unveiled his plan to implement US tariffs, that is 25% tariffs on imported cars and light trucks effective next week, while those on auto parts begin on May 3rd. Now, according to analysts, the biggest headwind for oil right now are the concerns about tariffs and that tariffs might slow demand. Now, this is after new 25% tariffs imposed earlier this week on potential buyers of Venezuelan crude as well. Now, moving on, the yellow metal keeps shining bright. Gold hit its record high as US tariffs sparked trade tensions. Now, the spot gold climbed more than 1% to $3,052 an ounce after hitting an all-time high of $3,059. Now, the bullion has hit 17 record highs this year. US gold futures climbed 1.5% to $3,066, which is also hitting an all-time high of $3,070 earlier this session. Now, these peaks come as gold as investors sought safe haven set in response to escalating global trade tensions and tumbling equity markets following President Trump's announcement of new auto tariffs. Remember, gold is traditionally seen as a hedge against economic and political uncertainty and often thrives in a low interest rate environment. Also, Goldman Sachs has raised its end 2025 gold price forecast to $3,300 per ounce from $3,100 earlier, citing stronger than expected ETF inflows and sustained central bank demand.
Absolutely. It's been a year of gains coming in as far as gold is concerned. It's been a very bright year for gold as well. But let's move on to get you an outlook on what kind of cues you should be watching out for. From the US, of course, like I mentioned earlier as well, there's personal income and spending data as well. Other than that, there's core PCE price index and University of Michigan consumer sentiment also that you should be looking out for. At least as far as the state side is concerned, from the UK, that's GDP as well as retail sales data sets. Those are the ones that are going to be remaining in focus. And from the Eurozone, there's consumer confidence data as well. Japan, there's Tokyo CPI that you should be looking out for. So largely those are on the macroeconomic front, that's what you should be looking at. But in terms of stocks, then you have Minda Corp board that will be mulling fundraise. So even that particular counter is going to be remaining in focus, and PwC report on IndusInd Bank is also likely to be out. That is something that we're definitely watching out for. As far as IndusInd Bank is also concerned, in terms of other key events, you have a couple of events. In fact, just one event, one speech to keep in mind. Atlanta Fed President Raphael Bostic is going to be speaking. So that speech is going to remain in focus on account of any commentary that comes out as far as the Fed's trajectory then is concerned. So definitely something that we're watching out for.
Definitely, those are the cues when it comes to cues for the market impact. Now, let's kickstart the morning with some top global headlines. The International Monetary Fund is continuing to assess the impact of US President Donald Trump's tariff plans, including his new 25% auto tariffs. But the global lender's baseline forecasts do not envision a US recession. IMF spokesperson Julie Kozak said that the duty is imposed on goods from Canada and Mexico, if sustained, would have a significant adverse effect on those countries' economic outlooks. Now, additionally, she also said that the IMF is continuing to assess the impact of Trump's various tariff announcements on other regions.
Important commentary to start your day with when it comes to the IMF, but let's also keep it going with tariffs. Then strong commentary coming in from Fed officials as well. Boston President Susan Collins, as well as Richmond Fed President Thomas Barkin on the tariff trade war. Then Barkin said that he did not expect the consumers to face a full-blown 25% tariff on imported autos. In fact, he also adds that he also expects the tariff implementation to spill over to the labor market. So that's key commentary coming in right there. On the tariff front, you also have Susan Collins, who said that the tariffs will be driving up the US inflation, but it is unclear how persistent that upward pressure is going to be at this point in time.
That is correct. Moving on, German Chancellor Olaf Scholz has said that Trump's decision to impose tariffs on cars is wrong, and that the US president had chosen a path that would produce only losers. Additionally, government officials added that Germany and the European Union would defend free trade as the foundation of their prosperity, with the European Union Commission, the bloc's executive, in charge of that process.
Now let's get you some more news and updates then. Meanwhile, Italian luxury car maker Ferrari has announced that it will raise prices by 10% on certain models after April 1st. Now this comes as a response to the 25% tariffs announced just yesterday. In fact, the move is going to be adding up to $50,000 to the price of a typical Ferrari.
Moving on, another update from US. Well, the number of US citizens filing for fresh unemployment benefits fell by 1,000 to come in at 2,24,000 in the week gone by. Well, the figure in fact came in lower than the estimated 2,25,000. Now, the US Labor Department's revised last week's initial jobless claims to upwards to 2,25,000 from 2,23,000 earlier. Meanwhile, continuing claims in the week ending March 15th decreased by 25,000 at 1.85 million. Remember that as of yet, the jobs report does not include claims by the recently laid off federal workers.
Moving on, let's get to some more news and updates. Russian President Vladimir Putin has accepted Prime Minister Narendra Modi's invitation to visit India, and preparations, in fact, are underway for it. In fact, Russian Foreign Minister Sergei Lavrov also said that in a video address, in fact, he's said that arrangements are currently being made for Putin to visit India. However, the dates of the visit have not yet been revealed. In July last year as well, you did have Prime Minister Modi making a two-day visit to Moscow to attend the 22nd, in fact, Russia-India summit. In October, in fact, he visited the Russian city of Kazan for the BRICS summit. And to know more on this, in fact, Sumita Karis is joining us with some more details. Sumita, what's being penciled in when it comes to this particular visit?
Right, in fact, Russia and China are aiming to take the bilateral ties to an all-time high. And for this, Russian President Vladimir Putin is soon going to visit India soon. And that's the word coming in from Russian Foreign Minister. Right, in fact, Russia and China are aiming to take the bilateral ties to an all-time high. And for this, Russian President Vladimir Putin is soon going to visit India soon, and that's the word coming in from Russian Foreign Minister Sergei Lavrov. He was speaking about the visit, about preparations being in full swing. They are being made for President's visit in a televised address. However, he did not really specify the month or the date when the visit might take place. Now, during his visit to Russia last year in Kazan for the BRICS summit, Prime Minister Modi had invited the Russian president for an official state visit, and which is when President Putin had accepted that invitation. Now, remember, this would be President Putin's first visit to India since the Ukraine war broke out in February 2022, and it is expected to take forward President Putin's new economic roadmap for 2030. And India and Russia have also agreed to double their bilateral trade to over $100 billion annually. So it'll be interesting to watch out the kind of additions that are made to solidifying the investment and trade partnership. Now, both countries have also agreed to significantly expand trade routes between the two Asian giants. In fact, the Chennai-Vladivostok Maritime Trade Corridor will play a key part in supplying fresh supplies, providing fresh supplies from Russia to India. And bilateral trade, of course, is going to be one key thing. But of course, it is going to be interesting to watch out from a China perspective as well, because China's relationship with Russia has been on a solid footing. And of course, Russia and India's relationship have a history, have a very, very long history. We'll have to really see how it really pans out, because as of now, what Donald Trump is attempting to do it is to start a peace process so that the war could be brought to an end. By the time the Russian president enters India, what stage the war will be at or what state the peace talks will be at will be interesting to see. But overall, India, while staying neutral in the Ukraine-Russia war, has refused to join sanctions and has advocated that solutions cannot be found on the battlefield. And of course, both parties talking to each other is the only way out.
Well, thanks for those updates, Amita. Now, moving on, amid all of this chaos over Trump's tariffs, Union Minister of Commerce and Industry Piyush Goyal has explained how good days are ahead for India and US trade. He also informed about the work that is underway on India-US bilateral trade agreement at Times Now Summit. Listen in to that excerpt.
Trade negotiations are going on for a bilateral trade agreement. It's a matter that's known to everybody ever since we saw the joint press conference with President Trump and Prime Minister Modi both announcing the beginning or the start of negotiations to be concluded by fall 2025 for a mutually beneficial, balanced bilateral trade agreement. And the discussions are ongoing. They're progressing well and will be for the good of both the United States and India. I am in regular and constant dialogue with industry from every section of industry, from different organizations related to agriculture exports, different organizations related to engineering, electronic, textiles. Various interest groups are in regular dialogue with the government, and all are very excited about a potential bilateral trade agreement with the United States.
All right, then let's keep it going with commentary coming in as far as tariffs then are concerned. In fact, Nitin Gadkari, Minister of Road Transport as well as Highways, explained how India was working on becoming an export powerhouse and the plans then to deal with tariffs. Let's go across and listen in to what he had to say.
अभी जैसे लिथियम आयन बैटरी है, टाटा है, हुंडई है, टोयोटा है, सुजुकी है, करीब 7-8 कंपनियां अब उसका मैन्युफैक्चरिंग शुरू कर रहे हैं। सेमीकंडक्टर जो इसका बिल्कुल आत्मा है, अब बड़े प्रमाण पर सरकार ने ऐसी योजनाएं बनाई है कि इसमें बड़े प्रमाण पर काम हो रहा है। मुझे नहीं लगता कि ऐसी कोई समस्या है। और ये हायर टैरिफ वगैरह की बात करते हैं, देखो राइस कितने 30%, 40%, हम तो लगातार बढ़ ही रहे। अभी इलेक्ट्रिक ट्रैक्टर बन रहा है, इलेक्ट्रिक ट्रक बन रहे हैं, इलेक्ट्रिक बसेस तो वेटिंग लिस्ट है, मिलती नहीं है। तो मुझे लगता है कि इसमें स्काई इज द लिमिट। और हम लोग धीरे धीरे जो क्वालिटी बना रहे हैं, जो डिजाइनिंग हमने किया, अभी हमारे इंडियन कंपनी ने आपने देखा कि नहीं मुझे मालूम नहीं, ये जो फॉरेन ब्रांड्स है उनके तो अच्छे डिजाइन है, पर हमारे टाटा और महिंद्रा ने भी सुंदर गाड़ियां बनाई है। और हमारी ये छोटे छोटे कानपुर, लखनऊ जैसे शहरों में जो स्टार्टअप थे, उन्होंने वो होशियार है कि 120 किलोमीटर की स्कूटर बड़े कंपनी ने बनाए, उनने 60 किलोमीटर की बनाई, जो बैटरी का कॉस्ट कम हो गया। वो 60 और 70 हजार में अब वो स्कूटर बेच रहे हैं। तो छोटे छोटे लोग वो स्कूटर ले रहे हैं। इलेक्ट्रिक साइकिल भी आ गई है। तो मुझे नहीं लगता कि इतना पोटेंशियल है, और सरकार ने ये जो विशेष सेमीकंडक्टर है, लिथियम आयन बैटरी है, जो क्रूशियल पार्ट्स है, इसके लिए काफी कंसेशंस दिए हैं। और ये जो स्क्रैपिंग इंडस्ट्री है हमारी, जो हमने शुरू की है, उसमें 15 साल के ऊपर की गाड़ियों का स्क्रैपिंग हो रहा है, जिसके कारण ये एल्यूमिनियम, कॉपर, स्टील, रबर, प्लास्टिक सब रिसाइकलिंग होगा और ऑटोमोबाइल कंपोनेंट की कॉस्ट 30% कम होगी और विल बी मोर कॉम्पिटिटिव इन द वर्ल्ड मार्केट। दूसरी बात, जो लॉजिस्टिक कॉस्ट है, जो हमारे देश में 14 से 16% है, चाइना में 8% है, यूरोपियन और अमेरिका में वो 12% है। मैं आपको बताता हूं कि निश्चित रूप से 2 साल के अंदर हमने ऐसे रोड बनाए हैं और फ्यूल में इतनी अल्टरनेटिव और बायोफ्यूल में संशोधन किया है कि 2 साल के अंदर हमारी लॉजिस्टिक कॉस्ट सिंगल डिजिट यानी 9% होगी और हमारा एक्सपोर्ट 1.5 गुना बढ़ेगा।
Well, that's the latest word coming in on India becoming an EV powerhouse. With that, it's time for a very short break on ET Now. We'll be right back on Market Cafe. Don't go anywhere. Welcome back to ET Now. You're watching Market Cafe with me, Kanishka, and Shreyansi. Thanks for staying tuned. Well, now it's time for a quick Asian market check. Well, most Asian shares fell this morning, mirroring US equities as concerns about the upcoming reciprocal tariffs and a widening trade war overshadowed data showing that the US economy grew faster than estimated. Well, a regional gauge of equities fell 0.7%, with indexes in Japan, Australia and South Korea declining after both the S&P 500 and Nasdaq 100 slipped, with automakers getting the biggest hit. Now, Japan's benchmark Nikkei 225 was down more than 2%. Over in South Korea, the Kospi index is down more than 0.5%. China's Shanghai index is down 0.15%, while Hong Kong's Hang Seng index is up more than 0.5%. Remember, all of these moves come as markets are cautious about President Trump's promise of announcing reciprocal tariffs on April 2nd after slapping a 25% tariffs on imports of all automobiles into the country. Back home, India's benchmark Nifty 50 ended the day almost 0.5% higher. That is just 9 points away from the 23,560 level. Now, this morning, the implied Nifty suggests a start above the 23,700 level, indicating a gap-up opening for the Indian market.
Really, that's what it's looking like at this point. A gap up open is what we're penciling in, and when you take a look at yesterday's, where we closed yesterday as well, it's a very big uptick that we're penciling in. Not a very strong handover as far as the US is concerned, at least if you're not looking at it on a weekly basis. So let's really see how that pans out for us. But with that, let's also slip into news for the hearing impaired. Welcome back. You're watching Market Cafe on ET Now. Time now to get you some more news and updates. Then the government, in fact, is gearing up for its financial year 26 borrowing spree for the first half of the fiscal. The centre is set to raise 8 lakh crore rupees through 26 weekly auctions. These auctions, in fact, are strategically spread across tenures, and there's a mix of buybacks, security switches, and the ever-flexible green shoe option as well. That is also going to be at play. Let's bring in my colleague Prakash Priyadarshi then to walk us through the entire plan then. Prakash?
The government has announced the borrowing plan for first half of the financial year 2026, where it has been decided to borrow rupees 8 lakh crore during first half, which is 54% of the planned gross market borrowing of rupees 14.82 lakh crore for financial year 2026. A very significant development coming in as per the government's statement. It will be borrowed through issuance of dated securities, where government will borrow approximately 10,000 crore through sovereign green bonds. Along with that, the gross market borrowing of rupees 8 lakh crore during first half of the financial year 2026 will be completed through 26 weekly auctions, where government will continue to reserve the right to exercise green shoe options to retain an additional subscription up to rupees 2,000 crore. Along with that, when it comes to weekly borrowing through issuance of treasury bills. That will be approximately 19,000 crore for 13 weeks. In addition to that, the government has fixed the wage and mean advances limit for H1 at rupees 1.5 lakh crore. That's an important development coming in, and the government has clearly mentioned that it will have the flexibility to modify the notified amount and timings for auctions depending upon the requirements and market conditions.
Well, that's the word coming in as far as the lowdown of the H1 borrowing plan is concerned. Now, we also spoke to experts to discuss the H1 borrowing data. Listen in to their take.
Have a bond index inclusion, at least not as yet. So it's a little lower than expectation in terms of the first half front loading. So definitely in the near term, in terms of supply, it translates into around 5.9 trillion of net supply in the first half, which is slightly or similar or slightly higher than last year, but similar levels. And given the fact that RBI is conducting or has already done significant OMO purchases in FY25, and we expect them to continue conducting OMO purchases in FY26. We expect that it will be good for the GSEC market. We expect 10-year yields to come down, to come off to around 6.4 to 6.5, supported by liquidity infusion via OMO purchases in FY26. Also, the rate cut cycle, we expect another 50 basis point cut.
What proportion of overall full year government borrowing has been earmarked for H1? It's broadly in a range which will not be too surprising. There can be debate at the margin whether it could have been a little lower, but I think broadly it will not take the market by any surprise. So I think overall it's a happy situation that liquidity is coming in. There is more expectation of rate cut going ahead. RBI is doing a bit of OMO on a constant basis, so that will also offer support to the government bond market. So overall, one can expect some more rally in the government bond yields.
Aradhan, tariffs have been also the talk of the town, so let's get you some key commentary coming in. On the tariff front, India can breathe easy on Trump's other tariff strike. Donald Trump's 25% duty when it comes to steel imports would not be rattling Indian exporters, as our shipments to the US remain minimal, and that's the exclusive word then coming in from JSPL Chairman Naveen Jindal. Here's a slice of that exclusive conversation.
So we'll see whatever is of interest to us. We will also bid actively. We have been bidding very actively, and we've been able to get many coal blocks, and now we are going to be absolutely self-reliant when it comes to coal. We have already stopped importing any coal, and even going forward, we will not have to buy coal from Coal India either.
Sir, allow me to ask one question on the current tariff war. The US government has decided to impose 25% tariff on steel import. So how do you see this decision?
It does not matter to India, because we have not been exporting any steel to the USA. And now India has also imposed 12.5% safeguard duty. So this 12% safeguard duty will also go a long way in supporting the Indian industry for any kind of unfair dumping that anyone would want to do in India.
The industry was suggesting government to impose 25% duty.
No, we are okay. We are okay with the 12%. If the government feels that 12% is enough, Indian steel industry is very, very competitive. So we can face anybody in the world, because we are very competitive, and all our plants are very new. We are very efficient, so we can handle it.
Well, that's the latest on the as far as the steel industry is concerned. Now, speaking at the Times Now Summit, Vijay Shekhar Sharma, the founder and CEO of Paytm, he charted out the growth plan that he's looking at when it comes to 2020-30. Listen in.
We truly are privileged that we have opportunity of India. Our company is built in an era and age where the consumers, the businesses use technology at that depth, and the opportunity of serving brand and reach is phenomenal. So in next, whether you talk about 3, 5, 7, 10 years, whether you talk about further year, we will continue and remain committed to serve our country's population, country's small businesses. And like I said, The business doesn't require the new thing to be done because the needs are simple. It's like saying that you need payment, you need insurance, you need wealth, services, and so on. So those services will become, how do they become? And how do they serve? Even to the corner case of the corner case. It's easy to give a credit to, let's say, a large company whose data is publicly available, but it is tougher to give to a person who's like, let's say, a auto rickshaw driver or a normal rickshaw driver or a mazdoor or a person whose data and inherent elements don't exist. Our success will be that we will be able to bring at least 50 crore Indians to the mainstream economic benefit. And I think that is what our continuous commitment and goal remains, and we'll remain committed to it.
And do you have any timeline in mind to hit this milestone?
2030s is, I think, is the first milestone that we should be able to cross this. And when I say this, it is in payments we did and have our customer base very large, but I'm talking about financial services because mainstream of economic benefit comes with these other services.
Let's go across and listen into what Paytm top boss then had to say when it comes to the funding winter that the country has been seeing then.
हम लोगों को फर्क नहीं पड़ता ग्लोबल वॉर हो रहा हो ना हो रहा हो, हमें फर्क पड़ता है कि इंडिया में इन्वेस्टमेंट आ रहा है नहीं आ रहा, और यंग कंपनीज में आ रहा है नहीं आ रहा. That I believe is something because of US Treasury yields being higher, the money just sucked back. So once the US Treasury yields go low, the money comes back to the emerging markets, including India. So as an entrepreneur in the technology space or young startup space in India, while it is, whether you talk about real war or trade war, which are happening, both are visible and seen, I would say anything that tilts the money flow back home, and that too in a startup ecosystem, is good. So maybe some of our policies, some of our international inter-country geopolitics or something restricts or limits that opportunity. The real thing that we should be, मतलब अर्जुन की आंख की तरह हमें सिर्फ एक ही काम करना चाहिए कि पैसे कैसे आएं, और बाकी सब कुछ सॉर्ट आउट हो जाएगा. क्योंकि यहाँ पे जो लोग हैं, जैसा आप जानते हो, एज एन अपॉर्चुनिटी वी आर एबल टू टेक केयर. एंड आई थिंक इट हैज बीन टॉक्ड मच अबाउट, आपने भी बोला हुआ है कि एटलीस्ट स्टॉक मार्केट को तो इंडिया इन्वेस्टर मिल गया है ना. मतलब अब हम वो ऑर्फन नहीं रहे जो कि अगर बाहर चले जाते हैं, इंटरनेशनल इन्वेस्टर चले जाता है तो डोमेस्टिक मार्केट के बहुत सारा इन्वेस्टमेंट आ जाता है. एंड दैट्स आई थिंक इज अ मैच्योरिटी. वंस अगेन, लाइक आई सेड, इट इज इनएविटेबल टू हैपन. ये होके रहेगा, हम ही हंसतो यही होके रहेगा.
And that's the word coming in from Vijay Shekhar Sharma when it comes to funding winter. Now moving on, when it comes to rankings, Mumbai has lost its billionaire crown in the latest Hurun Global Rich List. And for the first time, Shanghai has edged past India's financial capital as Asia's billionaire hub, boasting 92 billionaires to Mumbai's 90. But it's not all bad news on the ranking front. India's billionaire count has swelled to 284, which means it's clocking a 10% rise. However, there's a shake-up at the top. Mukesh Ambani's wealth tip has seen him slip out of the global top 10, while Gautam Adani is making serious waves with a staggering surge in wealth. Adani has solidified his position as India's second richest, reshaping the country's billionaire board.
Thank you so much for staying tuned in. Well, time now to get you the list of stocks that you should be keeping on your radar bright and early this morning. In fact, Gaurav is standing by with just that list. Gaurav, good morning. Which are the counters that make it to your list?
BSE, now this stock is definitely going to be in focus today because now NSE has deferred its changing its weekly expiry from Thursday to Monday because of the SEBI's released consultation paper, and as a result BSE is definitely going to be in focus because it is a huge positive for BSE. Other than that, Max Financial Services is in focus. Yesterday we saw 1.5% equity changed hands, and we saw a marquee investors actually buying in. So we have got Citigroup, Coptal, Mauritius Investments, DSP MF, ICICI Pru MF, who bought shares of Max Financial services yesterday. As a result, this company is also going to be in focus. Suven Pharma is yet another counter which will be in focus because now NCLT has approved scheme of amalgamation between Cohance Life Science and Suven Pharma. ONGC is also going to be in focus because the joint venture of ONGC and NTPC Green has now acquired 100% stake in Ayana Renewable. Now the cost of acquisition is around 6,248 crore rupees. Other than that, Samvardhan Motherson is going to be in focus. Yesterday we saw this stock was down and the reason was the Trump's 25% tariff trade. Now what company has come up with their explanation is that it won't be impacted as much as it was estimated because most of their manufacturing is based in US or either in US or US states, Mexico and Canada agreement, which are the states which are in these agreements. Lastly, we will be also focusing on some companies on the back of the order win. We have got BL who received an order worth 1,385 crore rupees. HL also signed an amendment later. With this, the order book revision is going to be from 5,989 crore rupees to 6,542 crore rupees. BEML is also going to be in focus because this company also won an order from Bengaluru Metro worth 405 crore rupees. And there are some companies which will be in focus on the back of the QIP. So we saw a few banks came up with QIP last in this week, and now these banks have closed their QIP. So we have got Punjab and Sindh Bank who issued around 1,200 crore rupees via QIP at a price of 38.37 rupees per share. Central Bank also raised around 1,500 crore rupees via QIP at a price of around 40 rupees per share. And UCO Bank is also going to be in focus because this bank also raised around 2,000 crore rupees via QIP at a price of around 34.2 rupees per share. So definitely watching out on all these counters on the back of the news flow that we have received in the morning.
Thank you, Gaurav, for those that list of stocks to keep on our radar today. Well, as we head into the new fiscal 2026, let's take a stock of how stocks and indices have moved in the month of April over the last 10 years. My colleague Ansh is standing by with some interesting data. Take it away, Ansh.
Well, this is a seasonality study done by JM Financial, and as per report, they have actually quoted data for the month of April of last 10 years. And as per that, we are seeing that Nifty in last 10 years in the month of April has been positive 7 out of 10 times, giving an average move of 2.4%. Whereas if we talk about mid-cap index, then here we are seeing it has been positive at least for 8 out of 10 times, giving an average move of 4%, indicating good bullish pressure in the month of April. Also, if we talk about sector indices, then most of the sector indices seems to be in green in the April month on an average basis. Metal has been the top performer with a 7% move, auto by almost 5%, pharma by 4.7%, Nifty Realty, energy by more than 4%. Only Nifty IT index is the only one which has been negative on an average basis. Rest all seems to be positive here. Now, if we talk about indices that have closed at least 8 times in last 10 years in the month of April, then Nifty Metal, Nifty Auto and Nifty Energy are the indices which have been positive, including Nifty. Also, if we talk about indices that have closed negative at least 7 times, then only and only Nifty IT index is in the list. Nifty IT index seems to be very negative in the month of April. Let's also talk about stocks that are in focus. And here we are seeing the F&O stocks that have closed at least 8 times in last 10 years in the month of April are Navin Fluorine, Ipca Labs, KEI Industry, Nestle, SRF, Page Industry, Interglobe Aviation and APL Apollo Tube. Whereas on the flip side, if we talk about negatives, then let's see the stocks that have closed in red at least 7 times in 10 years are Infosys, HCL Tech, Solar Industry and Wipro, with IT stocks being the major and the downside.
Thanks, Ansh, for getting us that roundup. With that, completely out of time on this edition of Market Cafe on ET Now. But as we bid you goodbye on Market Cafe for this week, let's get you key commentary coming in as far as NBFCs, autos and IT are concerned. Let's listen into the word coming in from Mihir Vora, who's the CIO at Trust Mutual Fund.
Banks and NBFCs, the large banks and NBFCs had underperformed actually almost for 1.5 to 2 years. And that was with, good reason. Credit growth was coming down, liquidity was tight. RBI was telling some of the large NBFCs to take it easy on the unsecured loans. Also, there are structural and fundamental reasons for the slowdown, and we did see a good significant derating of the large banks and large NBFCs. All these factors are now getting adjusted upwards. First, you have a low base to start from. RBI is getting dovish, liquidity is being provided, the interest rates are being cut. Government spending, which was a drag, is now coming back. So all those sectors, all those factors, I think, will continue to help the economy. And if we assume that we meet our 6.5% GDP growth target for this year and next, which is FY26 and FY27, then credit in the system has to grow. We are running at almost only 10 to 11% credit growth for a country growing at 6.5%. That's not possible, because for the industry to really grow, you need at least 1.2, 1.4 times credit growth to GDP, and we are talking about nominal. So credit growth has to come back to 13, 14% in the next few months. And we have a good base to start from. So financials, both from the terms of growth as well as in terms of valuations, are looking quite attractive, I would say.
If you like this video, then like, share and subscribe to ET Now.